Welcome to the night where we light up the spark. We're trading crypto, find out you'll be mad on the charts. Hosted by the one Lunar Beaches top shark. Dive deep into the numbers cause this ain't no lark. We're crunching all the data, making money moves fast. From Wall Street to the blockchain, making predictions last. Community together in this financial blast. Markets after dollar shatter ceilings made of glass. Mad on the charts with Lunar's bright lights. Crypto markets soaring through the night. Follow the trends, see future in sight. It's markets after dark, the financial flight. From Bitcoin to Ethereum, we're mapping the road. Stock tips and insights, secrets ready to unload. Trading strategies, sharp on knowledge be showed. Let Lunar Beaches guide you to the mother lode. Economic loops and the way the dollar flows. Community vibes where everybody grows.
I have a stream on my channel earlier today. Internet perfectly fine. Stream went splendid. Start this stream and automatically I'm getting messages about the internet. I don't understand. Are they bogging my internet down at nighttime? Is that what's happening? Is that what's happening? How does everything sound? Are we okay? Please let me know in the chat. Are we okay? Aside from the markets, are we okay? Are you okay? Are you really okay? So far, looking great. All right, good. All right, cool. So, market's dumping. Getting a little bit of a relief bounce, but question is, do we have more down to go or not? We'll find out. But tonight, welcome to Markets After Dark, where we go mad on the charts right here on the Piper Academy Network, Sunday through Thursday, 11 p.m. Eastern Standard Time. I am Lunar Beaches Crypto. This is Macro Monday. It's the pre-Monday, pre-week show. We give a weekly outlook. We're going to go over some indices. We're going to go over some Dixie, some Bitcoin, some Ethereum. We're going to go over some Kabisi letter stuff. We're going to look at the markets, general market overview. Going to look at the economic calendar. Going to look at a lot of stuff, okay? We want to try and gauge how this week is going to go. It could be a little messy. Could be a little messy. Could be a little slop. Could be a lot of downside. Who knows? But before we get into everything, don't forget to hit that like button and throw some ribs in the chat. Rib chat, what's up? Let's go ahead and bring up the crazy people of the madhouse. Boom! There you beautiful people are. What's going on, everybody? Hope you are doing well. Hope you've had an amazing weekend. It was a pretty boring inside the house weekend for me. Kind of boring. When you have kids, it's kind of hard for things to be boring, but I mean, it just rained a lot. There's a lot of flooding in the area. Stuff's going on. People without power. Prayers, thoughts of prayers to everybody that's been affected by these storms. It has not been nice. The weather has not been nice of the past 5 days or so, but people are making it. They're getting out in their kayaks. Yes, someone actually got out in their kayak and was just kayaking around in the flooded waters. I don't know if I would do that or that I recommend that, but you know, Anyways, what's going on, everybody? Let's say hello to the beautiful people, the beautiful, beautiful, crazy, madhouse people. What is going on? All set. Good evening to you, Alexandra G, Mod Queen in the house. What's going on? Hope you had an amazing weekend. Jesse Gluck, have a great stream. I'm going back to sleep. It's 4:53 a.m. Good night, Jesse. Get you some sleep. Harp, heard this is a special VIP event with mandatory attendance. Absolutely. Think that's every single mad, but you know, I know people get busy. It is what it is. Dylan VA, good day, all. What's going on? Good evening, good day, good morning, wherever you are in the world. Everything's looking great so far. Bob Lormis, what's going on, Bob? Hope you are doing well. Good evening, good evening. J Violet in the house. What up, what up? Wick 589, what's going on, brother? Hope you are doing well. Army Piper in the house. What is going on, Army Piper? Thank goodness drugs don't need electricity. What? I'm tired of winning, says Army Piper. Yes, we're doing so much winning. But let me ask you guys something. When you see this chart, I just want to ask you something. Or when you see this heat map, I just want to ask you something. Have you even said thank you once? Have you even said thank you once? Okay? Look at all this golden opportunity sitting right here. Look at it. Is this opportunity? Or is this we need to hold on tight and wait for the actual opportunity? Who knows? But right now, it's a little dicey. It's a little dicey. So yeah, I just spent the weekend with the dog, with the puppers. Oh, shout out, prayers, thoughts, for the middle child, for my middle child. I don't know how else to say it, but her guinea pig passed away today. So you know, it's kind of it's pretty sad. Whole 5 years. 5 years. They live 5 to 7 years, so you know, had to be the dad thing. We lagging? Cool. Had to do the dad thing and go out back and dig a hole and do all that good stuff. Why are we lagging? I don't understand. Terrible. My stream earlier today went like splendid. Went without a hitch. Went off without a hitch. And now we're getting lag. Let me close Discord. Hopefully that can help. Iko, what's going on? Hope you're doing well. All right, well, we got viewers dropping off. Cool. That's all right. That's okay. Let's go ahead and go over. Let's do a little bit of market overview. Get into the charts. This portion of the show is brought to you by Blowfin. Me too. Tornadoes in Arkansas again? I don't think so. I hope not. But I don't think so. But anyways, all right. Let's go ahead and get into this. We'll see if it continues to lag. I mean, I don't know what to do. I've done everything that I can. Like I don't know why it does it. To be quite frank. Why did that just happen? Okay. All right. Maybe a Band-Aid. Where were you earlier today when during the Lunar Beaches Crypto live stream? We were jamming out to Caramel. So by Sleep Token. But yeah, so all right. So at market open, we had the S&P 500 drop 1.76%. Did you play taps? I don't know what he's talking about. And then after the open, I mean, we got a drop from last Friday to the lowest point so far today of 5.19%, minus 5.19%. Currently down 2.73% from Friday's close. I imagine it's going to try to come up here and maybe fill a little bit of this gap before potentially rolling over. So we'll need to watch the gaps. Mind the gaps, okay? We need to watch the gaps. Yep, it's better now. Well, I killed Discord. Viewership cut in half, so that's awesome. But anyways, it is what it is. NQ down 2.19% at the open. Got as low as minus 5.85%, getting a little bit of a bounce as well. Watching the fair value gap, or not fair value gap, but the close gap, the market gap, the weekend gap, whatever we call this, the CME gap, whatever we call it. Just the gap. It's just a gap. Okay. Thank you for the song, Dave. Play it 24/7. Yeah, man. No problem. I'm glad I was able to get that out to you. Howdy, hotties. What's going on, Dusty Hunt? Hope you're doing well. No spam in the ramen tonight. That's right. No spam in the ramen. Yeah, the Dow, not the Dow, but the NASDAQ pushing to the downside as well. And so has the Dow Jones. Down minus 1.76 at the opened, and then at its farthest point, minus 4.5%. So not as bad as the other two, but still not good. Still not good. We'll go deeper into these later in the show. We're just giving a little bit of an overview so far. LBC joke about tornadoes because of lag. Exactly. Bitcoin. We got a nice big CME gap on Bitcoin as well. It gapped down. This is Bitcoin futures. So it gapped down 5.78%. Lowest. Hold on. There we go. Lowest point came in at minus 8.58% from Friday's close. Currently sitting down 7.36% and not looking too good. Not looking too good. Maybe trying to work out a bottom in here. All of these might be trying to work out a bottom, but outside of that, we've got these massive gaps ahead or above us, where price could probably come into and then reverse from, because we know that there's likely sellers up here because we opened up down here. So if we come back into the gap where the sellers are, it's one of two things. Either we sell off again from there, or we get a short squeeze to the upside. I mean, really only two ways about it. I would, be more risk off personally, not financial advice, but I'd be more risk off at the moment. Wait for Bitcoin and the market in general to show its strength, to show its hand. Zoom out a little bit, looking at the total crypto market. We have broken below the 52-week SMA. 52-week SMA, broken below that, closed below it last week, but that is not a good sign. The last time that we closed below the 52-week SMA on the total crypto market chart was right here, January of 2022. You can see we put in basically a bear flag in here, where bang, 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 bang. Come on now. Bear flag, where price just faked out to the upside and then rolled over. Did get back above the 52-week, but then immediately took it back and then started to crash. I have to crash. Sorry to miss the show. See y'all at 774 at stand 2. Okay. See you then. But yeah, so this is more reminiscent of, you know, kind of like a potentially mid-cycle top. We come in, we take out lows, and then we potentially push to the upside. But that would mean that we would come down and come below 1.69 trillion mark. Which I wouldn't say is impossible. This is not looking good, I'll tell you that much. But yeah, so the total crypto market is currently down on the day 0.5%, down $11.23 billion. If we look at, you know, last week open to close, we went down 6.41%. So the total crypto market is also getting that pullback, getting that close below the 52-week SMA. Not good. It's not good. It's not good. Okay, it's not good. Now we are coming down to, maybe we've already tapped into it, the current yearly low, which did come in last week. So we took out the current yearly low that was put in here, took that one out last week. So maybe we can get a sweep of the current year low and then push higher, but I would not hold my breath. Do not hold your breath. Let's get back above the 52-week SMA, and then we can start talking about potentially more upside. But we've got to have some macro conditions shaping up too, right? So we'll see. I did not add the Dixie. Let me see the Dixie. All right, so the Dixie with a big dump last week with a nice take back. But let's go to the daily. So daily, we're opening up. That's Friday. Open up pushing down, and now currently pushing to the upside. So Dixie's still struggling as well, which is supposed to mean good for our risk on assets, but as of late, that has not been the case. People don't seem to be fleeing to the dollar, which is kind of weird. Where are they fleeing to? If they're not fleeing to the dollar, where are they fleeing to? Wouldn't happen to be gold, would it? A little bit of a sell-off in gold. I don't know. We broke this wave crest here. We crested, and so the next big tsunami is sitting here at about $2,915. So potential for gold to get down there as well. But yeah, I mean, things are going into stable coins, but what about the trillions of dollars that were in the stock market? That's what I want to know. Of course, the Dixie is just a representation. That's the thing. The Dixie is just a representation of different fiat currencies. The dollar against different fiat currencies. 5 of them, to be exact. The Australian dollar, which has plummeted on the open. The euro, which has pumped on the open. This is the daily. Let's go to the 5-minute. Let's go back to the Aussie. All right, so it started off to the downside. It's trying to push to the upside, but it's getting into this bearish fair value gap. We can push up and close above this high, then maybe we can see the Aussie dollar start to push higher, which would be going against the Dixie, bringing the Dixie down. The euro got a nice pump on market open, starting to pull back though. Not looking good. This makes up more than 50% of the Dixie, so it is important to to pay attention to the euro, because if the euro is pushing higher, then the Dixie, more likely than not, is pushing lower. So we do have that 408 week 4-year SMA sitting above us, trying to get this breakout in here. We did get the breakout. Now it's back testing, and we'll see if the euro can continue higher and push the Dixie down. British pound broken above its 400. It's 4-year SMA. I'll just call it that. 4-year SMA coming up into high time frame liquidity over here, fair value gap, and getting a nice knockback, sweep the lows, and we'll see if it can start to work its way back out of here, or since we have a bunch of lows in here, see if it doesn't come down and just sweep all those lows. Oh man, the British pound not looking good. Canadian dollar, USD versus the Canadian dollar. So in this one, we want to see this one moving to the downside, because that would be going against the US dollar, which is typically better for our risk on assets. And same with USD, Japanese yen. So yeah, risk off is the name of the game. But this looks like it wants to plummet. Which would in turn push the Dixie down. So I'd say I'm leaning more towards downside for the Dixie if the euros, if the other ones can get moving to the upside. I mean, obviously, but yeah, I would watch for it to come up. It does have a little bit of this kind of a gap in here from this close to this open, so it might want to come up and do something in that range. But outside of that, this 103.40 level is probably going to be the level that it needs to get back above the Dixie before it could potentially start moving back to the upside. So but if not, I would look for potential reversal from there and for it to head lower. The Dixie is not in demand. Nobody wants the dollar anymore. So where are they going to go? Bitcoin? I don't know. Let's go back to Bitcoin. Go over here. Let's turn on Crypto Fear and Greed Index. There we go. Currently sitting in extreme fear at about 22. So extreme fear. If we start pushing any lower, we'll definitely get more fear in this market. And understandably so. What's going on, Flat Smack? Hope you are well. Treasury bonds and gold is where they go, bro. Oldest play in the book. Yep. I was thinking it, but didn't say it. I was like, they're probably going to treasuries, going into the yields. That's where all the dollars are going. And gold. I don't know. It was a brain fart moment. So yeah, stock market red, crypto market mostly red. A bit of a mixed bag. Crypto seems to be holding up a little bit better than I expected, but it's also been going down already as it is. So it's kind of like crypto beat the stock market to the punch. Economic calendar. Oh. Not too busy of a week as far as high impact goes. We don't have anything for Monday and Tuesday. We have the FOMC minutes coming out on Wednesday. That'll be at 2 p.m. Eastern Standard Time. The FOMC minutes is essentially a synopsis or I guess it's not really a synopsis because they actually put like quotes or what the Fed was thinking, how they were thinking, why they were thinking it. During the last FOMC, they put these out a couple of weeks after the FOMC meetings to give insight into what the Fed was talking about during that meeting. So that's what. So it'll be important to see what they were talking about and considering during the last meeting. And then we'll have core inflation data, more inflation data coming in. Probably not going to be great. Forecast prior was 3.1. This is year over year. Prior was 3.1. Forecast is for 3%. So that, of course, is above the Fed's target of 2%. But still kind of maintaining a lower forecast. But if this comes in higher, it's probably, I would assume, is not good. We've got especially the core inflation because that's what the Fed really looks at. But then we have our inflation rate month over month, 0.2% prior, 0.1% forecast. And then year over year, 2.8% prior, 2.6% forecast. Friday, we have PPI month over month. That is going to be the producer price inflation for final demand measures month over month. Changes in the price for commodities sold for personal consumption, capital investment, government, and export. It is composed of six main price indices: final demand goods, which includes food and energy; final demand trade services; final demand transportation and warehousing services; final demand services less trade, transportation, and warehousing; final demand construction; and overall final demand. So kind of showing us, is there demand in the market? We want to see the demand fall because that helps in the Fed lowering interest rates. So does a lowering inflation rate, but I don't think we're going to be getting that. I don't know that we're going to be getting a lower inflation rate. So the Fed has two I forget what they're called. They're two objectives essentially. Are one, keep inflation at bay, and two, increase the number of or low employment. That's their goals. They want to keep inflation at bay while also keeping unemployment low. So I don't know. It's it don't look good. Now we'll get into, I have a question. We'll see what you guys think later. But right now I want to go over this Kobisi letter. Let's see. Let's do news. Let's do, oh, hello. There we go. All right, so the free fall continues. Today's drop in U.S. stock market futures puts S&P 500 futures down minus 22% and in bear market territory. The U.S. stock market has now erased an average of $400 billion per trading day for 32 straight days. Is it time to buy stocks yet? They say exactly 32 days ago, the S&P 500 hit a new all-time high of 6,147 points. In the below time frame, we explain how the S&P 500 has erased over 1,300 points in 32 trading days. This is a March 2020 style decline in sentiment has reached some of its most bearish levels in history. We got the chart here. We've got S&P 500 new all-time high. Trade war escalates with 25% tariffs on Canada and Mexico. Here, start pushing lower. Stocks bounce as trade deal hopes rise. We've got 25% auto tariffs announced. We're already coming to the downside. Liberation Day begins, and the U.S. stocks are race over $12 trillion. Over $12 trillion. Incredible. At around 12 p.m. Eastern Standard Time, crypto markets began to decline. This decline escalated sharply into 5 p.m. Eastern Time, erasing minus $200 billion of market cap. We took this as a clear indication that the risk-off trade was ramping up again. At 6 p.m. Eastern Standard Time, U.S. futures opened with a minus 6% drop. So what changed since Friday? It's more what did not change since Friday, as President Trump doubled down on his trade war. Heading into the close on Friday, investors were hopeful of signs of a trade deal this weekend. Instead, it was a complete silence and markets hated it. Minutes ago, President Trump was asked about the stock market sell-off. The S&P 500 is on track to fall roughly 15% in 3 days, one of its largest 3-day declines in recent history. His response? Sometimes you have to take medicine. All right. In other words, short-term pain for long-term gain. So, furthermore, in the latest AA2 sentiment survey, only 21.8% of investors were bullish, 61.9% of investors were bearish, the third highest reading in history. Only March 2009 and October 1990 saw higher levels of bearishness. Most of these responses were before April 2nd, so before the sell-off. Today, volatility index futures, the VIX, are surging above the August 2024 high. My goodness. We had been short the S&P 500 for weeks, as we called the S&P 500 sell-off orderly. This no longer looks like an orderly decline with fear at extreme levels. Capitulation for a bounce is near. Another clear sign of capitulation? Even the safe haven assets like gold are selling off sharply. Until Friday, gold has pushed sharply higher amid tariff uncertainty. Today, gold is back below $3,000. We already looked at that. It's back above it, but back below $3,000 an ounce as the rush to the sidelines has accelerated. Again, more panic. On Friday, between 9:30 a.m. Eastern Standard Time and 12 p.m. Eastern Standard Time, retail investors sold $1.5 billion of equities. This was the largest sale over a 2.5-hour period in history. Retail has been adamantly buying the dip since 2022. But it appears this trend might be rapidly shifting. Combine this with the mass exodus in institutional capital, and tons of cash is now on the sidelines. March 2025 marked the sharpest rotation of institutional capital out of U.S. equities in years. Retail is now joining the sell-off, adding to the already sharp decline. More record rotation out of U.S. stocks. We're going into bonds. Also, the amount of bad news that is priced in now is significant. We have not seen a relief rally over the last minus 15% of downside. Any near-term headline about a trade deal with a major trade partner or a tariff delay would result in a 5% plus bounce. Risk-reward shifting. Sum this all up and you now have 1. A straight line lower move in 32 trading days. 2. Crypto joining the sell-off after a flat week. 3. Gold selling off in a rush to the exit. 4. VIX above August 2024 highs. 5. Retail and institutional capital exiting. 6. Tons of bad news priced in. While this is not a call for a long-term bottom, we emphasize the need for a relief rally. Even the worst bear markets see relief rallies, often of 5% plus. Healthy bear markets need relief rallies to proliferate. After being short for weeks, we think it's a crowded trade. Okay. After being short for weeks, they think it's a crowded trade. So, I just wonder, will new trade deals, because we've already seen like Vietnam and Taiwan say they want to come to the table and negotiate new trade deals. Could these be the catalyst for potential upside? Guess we'll see. If I come to the weekly, though, everybody's talking about Black Monday. So what was Black Monday? Black Monday happened in 1987. I forget this is a futures. I need to go to SPX. Black Monday happened in 1987. Gosh, it was this drop right in here, okay? This drop is why they initiated a halting mechanism for the stock market, because of Black Monday. So we had the big sell-off, but after that, I mean, it was clear growth to the upside. Now, the only thing is, though, after the big sell-off, it was from that time until the new high came in, it was 644 days. So nearly 2 years. 2 years. Year and a half, 2 years before the S&P 500 set a new high. Now, it was growing in that time period, but we had already marked a bottom too. So the question is where is the bottom for today? Where's the bottom for today? We might even come all the way down and take out this low, but I'd be looking at this as some high time frame demand zone. We've already come way lower than the 52-week SMA than we did back in that 1987 mark, but we've got more capital in the market. We've been running really hot. If we can get into the high time frame demand and then start reversing to the upside, I mean, even if we did the exact same thing, let's just go ahead. Let's take a bars pattern. I know everybody loves to hate on bars patterns, but they do kind of help with perspective a little bit. So, first of all, I say perspective, and we can already see that 1987 crash led to growth over the next 13 years. Okay? Typical 13-year cycle. Not saying that's what we're going to get, obviously. We don't know what we're going to get. We could be in the midst of something like this. But we're crashing so hard and so fast that, I don't know. It's almost like it's a fake-out correction to the downside before we start pushing back to the upside. And who knows? Maybe all of this will actually get Powell to... I keep getting kicked out of the stream. It's weird. Maybe it'll actually get Powell to cut interest rates and start the money printer back on. Who knows? Maybe that's how we get to growth. Will it be the big countries' trade deals that will make it move? Yeah. Euro, China, not Russia, because we oddly left Russia out. Just because you have sanctions on a country, you got sanctions on several countries and you still tariff them. But anyways, this could be manipulation to get a good price to buy. Exactly. And then we could come down much lower. And the thing is, though, or a little lower. Thing is, though, we're looking at, November of 2026, a year and a half before the S&P breaks out into a new all-time high. And the thing is, between the S&P, the Dow Jones, the NASDAQ, and Bitcoin hasn't ever broken out into a new all-time high until after the major stock indices broke into a new all-time high. Never done it. The major stock indices have to break out to new all-time high first, because that is what fuels the bullishness in the market. That's what fuels the capital flow. Is you've got to get the stock market going before you can get the crypto going. Speaking of Bitcoin, let's go ahead and take a look. So we're taking a look at the weekly chart. We can see we're sitting on top of that 52-week SMA. Now we have already broken this on the total crypto market. On the total, for the total crypto market, we've already broken and closed below this. So that's not a good sign in general. What's going on, Trade Intuition? Bingo, bango. All right. So we are currently holding our macro trend. We're still pretty well above it. But if we were to just continue like a straight line down just from where we are right now, that's another 16% drop just to get down to the primary trend. Now, we are still technically high time frame bullish as we continue to put in higher highs and higher lows. Even if we came down here, that would still be a higher low. And you never know, we could push higher, or we could see a dead cat bounce and then have it roll over to the downside. So there's obviously options, but for now, I think we probably see more downside before we see upside, unfortunately. We're trying to bottom out, kind of putting in a hidden bullish divergence here on the Prime Oscillator Pro Plus. Shout out to Chart Prime. Get 45% off your first month. Link in the description down below. But kind of putting in a hidden bullish divergence here. If this thing can get turned around, then I think that would almost confirm the bullish, hidden bullish divergence. Now, our secondary trend we've got right here, and looks like we broke that right before the market, right before market closed today. Broke it, got to close below it, but that's not good. I've been watching that secondary trend. Now that we've broken it, it's almost a guarantee. Can't guarantee anything, but almost a guarantee that this is going to push lower. So not good. MVP oscillator. No candles for some reason. I don't know why it always does this to me. Dial. 0. No. Signal up. Band break. Is it going to be this one? Columns. Plot. Line. Okay. Where's my zero? Not zero line. It's not going to be the zero line. It's not going to be rank. And rank, signal up, tops, bottoms, peak, bottom, peak, top, plot, columns. Oh, yeah, there it is. Save as default. There we go. So on the weekly chart, we're putting in a lot of these on the MVP oscillator, putting in a lot of green candles in here, and that typically means it's a good time to buy. Let's go to the index chart and see what that's showing on us. Okay, so yeah, we did also start seeing some buy candles come in here last bear market. We've also got those same candles coming up here. They're really good at marking bottoms. We can come and look at the monthly chart. No green on the monthly chart. None of those green candles. So it is not indicating that it is a time to buy, at least on the monthly chart. So for the MVP oscillator, going back to the Prime Oscillator Pro, take a look. Our money flow is sitting here still in the red. Although it is does have an uptrend to it at the moment, and hopefully maybe that can continue, but for now, not so much. That is the monthly chart. Let's go to the weekly chart, and let's get off of the index because it's got weird candles. True 7 is clipping on the bottom end, and our power bar is getting really heated. So looking like we might be coming close to a bottom, but that we might still have more downside to go before we do hit a bottom. Not saying the bottom, but potentially, or at the very least, likely a local bottom where hopefully we would get a bounce, and then maybe we'll see if it rolls over or if it can get back above this high and then continue the trend higher. We've got to have some kind of catalyst in order for that to happen. And at this point, I don't know what that is other than the Fed cutting rates and QE, quantitative easing. What's going on, Gordon Sorensen? Hope you're doing well. Good morning, good morning, good morning, good morning to you. Good evening, good morning, good afternoon, wherever you are. But our money flow in the weekly is also in the red here, pretty steep in the red. We'll want to see this start to turn up. But that sell volumes is coming down a little bit. So when we're kind of maxed out on our trend ribbon, pushing below the lower boundaries, and as we are also clipping here on the weekly chart. So like I was saying, I mean, it looks like a little more downside, or maybe a bit more downside, a lot more downside, but just looking probably around 65 to 66K. Zooming out a little more, let's go ahead and throw a fib from this low to this high, and we do have golden pocket sitting up here at 70 to 72K. Potentially could be a bottom in there from this low to this high. We do have the 50% retracement sitting there at 67%. If we go from the very bottom, we do have that 63K coming in here at the 50% retracement from bottom to top, 50% retracement at 63K. So I'll just be watching those levels, 63 to 65K for potential low side probably at the very least. So all right, let's move on to Bitcoin dominance. We can see the dominance is shifting, pushing back to the upside as Bitcoin and the safety continues to be part of the safety trade along with stable coins. We're at 63.6% dominance. Top side up here is at about 69 to 70%. 786 is sitting up here at about 66% dominance. I think we will probably at least get up to there. But yeah, this is the dominance seems to also play when we break that 52-week SMA on the dominance tends to be when we start seeing moves in the altcoins as Bitcoin starts to lose its dominance to the altcoins. Now we can click this dominance and we can do plus USDC. No, not the dominance. Not the dominance. I want to do market cap. No, dominance. USDC.D plus USDT.D and hit enter, and there we go. So Bitcoin plus your stable coins. Maybe we can add plus DAI .D. Yep, market cap dominance. We can add that one. There we go. 72% of the market. So what this signifies is your safety trade. Safety trade being your risk off trade. This is everybody going into Bitcoin and stable coins. And we can see that we are pushing higher to the upper boundaries of the stables of the safety trade. Go ahead and invert that scale. We can see a little bit more of it, kind of, remove our bias. And we can see that we are coming into the lows here for our safety trade. And at the same time, we can pull up this and we can take a look at Ethereum. Let's go to ETH BTC. Let's zoom. Now we can do weekly on that one. And we can see we're pretty much at the same point. This was the bottom of the safety trade here. Then we see ETH BTC push to the upside, just like we did over here for our safety trade, is actually pushing to the downside. Again, this is an inverted scale. So we see our Bitcoin and stablecoin dominance fall, and that is what gives Ethereum its big push during the 2021 bull run. But then we can see the safety is going into Bitcoin and into stablecoins this entire freaking time. You have your outliers, of course, where we're just looking at we have our outliers where like our meme coins, our little outlier altcoin rallies and stuff like that. I don't know where I was going with that. But anyways. Going over a lot. Sorry. Can't really look at I could look at the chart, but kind of chilling right now. So the safety trade is obviously in stable coins. We're seeing a big stablecoin push and Bitcoin push. We're pushing to the upside, but we are reaching the upside boundary of the safety trade at the same time that Ethereum is going to 2019 bear market lows versus Bitcoin. XRP is actually holding up against Bitcoin during the same time. And it's holding its market dominance as well. Ethereum's dominance has been cratering, but XRP dominance has been pushed up and has been holding. So we'll see if that continues to hold, how long it can hold, if it can. But it seems like XRP might be taking a little bit of part in the safety trade. Maybe not so much. I mean, it is selling off, whereas dominance is going up in Bitcoin. But you never know. How's Ethereum doing? Terribly. Because F ETH. Running joke here on the channel, F ETH. But take a look at it. Simple terms, we're breaking below this high time frame demand zone here. If we lose that, we could be looking at this wick in here that overlaps a fair value gap, and we are already getting into that. But man, we just take this weekly order block, then that is kind of what we would be looking for right there. So ETH BTC trying to put in its lows at the same time that the US dollar pair is trying to put in its lows at the same time that the ETH dominance is trying to put in its lows. So we'll see. We'll see what happens. It's coming up to its 4-year SMA. So that 4-year SMA's got to hold, right? Got to hold. And yeah, what else do we got? What else? I just wonder if, well, we've already talked about it, but we'll see what happens with these trade deals, and hopefully we can get some trade deals going. But Bitcoin looks like it's about to do more selling off here. Go to the 5-minute. Yeah, I mean, that level's got to hold or it's going to sell off even more. Can't believe ETH is that low again. Yeah, it's kind of crazy, to be honest, but kind of crazy everything's as low as it is right now. So, getting a bounce off of the midpoint of this order block. A little bit of a bounce. We'll see what happens. We shall see what happens. Overnight, it's going to be tough. I think it's going to be a crazy week. Going to be another crazy week. I don't think we'll see if things settle down at all. But what I'll be looking for is a break. Let's remove our SMAs here. What I'll be looking for tomorrow, specifically tomorrow on the daily chart, I'll be looking to see if we get a break, a nice break below and close below this low here. If we do get that, then I'll be looking for this daily fair value gap for us to come up into that daily fair value gap. And then I will look to see if we get a market structure shift in here and for this thing to continue to the downside for the remainder of the week. We do have a daily fair value gap sitting right over here. Bang, bang. With also an order block sitting down here at about 69. Nice. $407. This whole little down move here before the big up move is going to be my demand zone just in general. So I'll just be looking for potential reversal from this zone. And then from there, wherever that bottoms in at, I'll go from a high. I'll take in my fib. Let's just say it goes to the midpoint of that zone. From there, we'll be looking to see if we can start taking out some retracement levels and start pushing to the upside. We'll want to get above this downwards trend first, break above a high, whatever this internal high potentially comes in at, come back down, back test, come into a fair value gap or order block, and then push higher. And then from there, I mean, we really got to get, well, we don't have to get moving. Like I was showing you, we could get some chop out of here. Could be messy and it could be slow. And we might not get out of here until, heck, even 2026. Who knows? It might take us, several months to put in a bottom in here and then really get going and not get out of here until 2026 even. This could have us finishing up and ironically wrapping us up around the 4-year halving cycle. Maybe. Yeah, we're not going to talk about those lows yet. Until we break the primary trend. We're not going to talk about no 44K. I mean, it's possible that we get down there. I mean, Piper and I have discussed this. Piper has discussed this several times at his show. Normally, from bottom to top on the fib, most cycles we get back down to the, for the bear market, we get down to the 786, which currently comes in at $35,554. So, yeah. Let's go look at this previous market. We go from, let's do the 3-day. Let's do the absolute bottom. And let's go to the absolute top. Okay. What do we come down to? 786. Yep. Okay. What about this cycle? Did we even, I don't know that we came down to 786 on this cycle. Oh, what is that? Oh, that's the 786. Look at that. So yeah. Our 786 would be sitting there at $35,554 from the current low to high. So, CJ been savvied. CJ, crypto has never seen a major recession. I wouldn't be surprised to see 10K. Yeah, I mean, you're right. And if any of you have been following me for any time, there's something, a little bit of a saying that I say all the time. See if anyone can guess it before I say it. Can anyone guess it before I say it? Anyone? Anyone? It's scary, but it can happen. Yes. Yes, it can. Anything can happen. Just like a reversal pump to the upside, mega pump to the upside. I mean, that is not what's likely right now, but anything can happen. Anything can happen. I'll give you guys a couple more seconds to answer it. Answer me. What is this? What is this? What do I love to say? Because it's true. Say it again, I'll guess. If I say it again, then you would guess it. Duh. What was the question? Oh, you guys. Wake up. Equal highs and equal lows love to be taken out. We have equal lows at $24,821. Would not be surprised at all for us to come down and take out that level. Simply because we have equal lows down there. And that's it. Because equal highs and equal lows love to be taken out. So, are we going to see a major crash like that? Is it going to be a slow bleed? What would be the catalyst to actually get us down there? That's the question. I don't see that as being likely, but it is there, and it is something to pay attention to. Now, the equal highs and equal lows are much more relevant. I'd say they're relevant in the high time frames, but when it comes to my intraday trading, I am always looking for equal highs and equal lows because they for certain will get taken out. So, but this is just straight nasty sell off. Probably best to look for shorts for the coming week. Let's go ahead and let's Monday settle out, see what we get on Monday. If we get that push below here and close below here, then I would just look for more downside with Tuesday potentially. So if this closes down here, I would look for Tuesday to potentially come up into that fair value gap and then start the reversal. Maybe we start the reversal on Wednesday, and then Thursday and Friday we sell off more with the economic data that's coming out. We also have the FOMC minutes on Wednesday that could push the price down. So just a myriad of factors. I would look for Monday and Tuesday. Monday to be kind of the tone setter for the week, if we do get that close below this low on Monday, look for the market to push up into the high time frame fair value gap, but then eventually want to come down and sweep the Monday low and take out the Monday low and potentially go for other lows that could be resting below us over here. So we shall see. So yeah, that's it, guys. Just know that we need to be careful. Everything's gonna be fine, even if things do even worst case scenario. Let's just start getting some cash and putting it to the side and holding on to some cash position. Remember, cash is a position. And if you put it on something like Coinbase and put it in USDC, then you can earn an APY off of that, and earn some yields. And as you wait, start building up that cash position, and wait for strength to return to the market before you consider going and starting to DCA. That is just my opinion. It's not financial advice, but either way, I hope you all have a safe trading week ahead. I will see you all in the Discord. Link is pinned in the chat or in the description down below if you're watching this on playback. Outside of that, guys, that's all I really got. I hope you all got something out of tonight's session, tonight's stream. That's what this is called. It's called a stream. Hope you got something out of it that you could take with you for the week ahead. And I will see you all tomorrow. Until then, I hope you all have an amazing, beautiful, wonderful, radical sleep. And I will catch you all in the morning. God bless. Never stressed. Good night. Mad love. Peace out. Bye.
Welcome to the night where we light up the spot. We're trading crypto, find out you'll be mad on the charts. Hosted by the one, Lunar Beaches Top Shark. Dive deep into the numbers cause this ain't no lark. We're crunching all the data, making money moves fast. From Wall Street to the blockchain, making predictions last. Community together in this financial blast. Markets after dark, shatter ceilings made of glass. Mad on the charts with Lunar's bright lights. Crypto markets soaring through the night. Follow the trends, see future in sight. It's markets after dark, the financial flight. From Bitcoin to Ethereum, we're mapping the road. Stock tips and insights, secrets ready to unload. Trading strategies, sharp on knowledge be showed. Let Lunar Beaches guide you to the mother lode. Economic loops and the way the dollar flows. Community vibes where everybody grows. Analyzing trends while the world lays low. Markets after dark where only brilliant shows. Hit that subscribe and join the ride. In the world of finance where fortunes collide. Lunar's path will be your guide. Through the market storm or the market tide. The charts with Lunar's bright light. Crypto markets soaring through the night. From crypto markets soaring fast. Markets after dark, shatter ceilings made of glass. Mad on the charts with Lunar's bright light. Crypto markets soaring through the night. Follow the trends, see the future in sight. It's markets after dark, the financial flight. From Bitcoin to Ethereum, we're mapping the road. Stock tips and insights, secrets ready to unload. Trading strategies, sharp on knowledge be shown. Let Lunar Beaches guide you to the mother.